and welcome to ETF Edge, your go-to place for everything exchange-traded funds. Investing according to environmental, social, and governance principles known as ESG is getting very controversial. I'm your host, by the way, Bob Pisani. You know, Florida and Texas are taking aim against ESG. The Texas comptroller accused 10 financial companies, including BlackRock, which has a substantial suite of ESG products, of boycotting energy companies. The move could force certain Texas government funds to sell any shares in these companies. And Florida this month banned its $186 billion pension fund from investing according to ESG factors. Joining me to discuss is Arnie Nowak. He's the head of Systemic Investment Solutions for the Americas for DWS. Mona Naqvi is the global head of ESG Capital Market Strategy at S&P Global Sustainable One. And Todd Rosenbluth is the head of research at Verify. Arnie, I want to start with you. BlackRock says it's not boycotting oil. They made a statement. We're not boycotting oil. Now, you run several large ESG funds. They have small positions in oil stocks. I mean, how do you respond to this? Are you boycotting oil? And what are you trying to do here with your ESG funds?
Yes. So Bob, it's actually relatively simple. The answer to that is no. We are not boycotting energy companies. And in fact, the ESG funds that you referenced, the ticker symbols SNPE and USSG, are the most prominent ones. They have between 4 and 5% of a stake in energy companies, which is in line with the S&P 500 standard index. So no, we still invest in an industry group neutral kind of way, and that does include energy companies.
Well, how do you respond to this, though? It's a little baffling. I mean, I look at your funds. USSG is one of them. Here's a big fund you manage. It specifically screens out alcohol, tobacco, gambling, and weapons. But I look at the list here of stuff you own. It's got some oil stocks in it, small positions in Schlumberger and Marathon. Isn't the point of ESG to say that profits matter, but it's not the only thing that matters? And you're saying what matters to you right here.
Correct. You're absolutely right. Profits do matter, and it is not the only thing that matters. USSG in particular is a great reference because USSG is largely sector neutral compared to the MSCI USA benchmark, but only invests in those companies that perform well from an ESG point of view within each sector. So we do not boycott any energy companies in that portfolio. We still hold them. We just hold the ones that do better than the average from an ESG angle.
You know, Todd, I want you to help me explain what's going on here. This politicization of the ESG process is a rather disturbing to me. We've all been following this for many years, but this is a new wrinkle. Now, you got a new piece out called ESG is not the Dark Lord we do not speak of. This is a Harry Potter reference, folks, in case you don't get it. We used to argue about how ESG indexes are constructed, what weighting to give E versus S versus G. Mona and I have been doing this for a long time, what should be included or excluded. But this is different. This is an attack on the very concept of ESG itself. What's the overall industry's response to this?
Well, this is just ludicrous. Simply, ESG stands for environmental, social, and governance. And the focus has been on the E part of it, the environmental aspect, and whether companies are too focused on climate change and what's happening related to that. But what you have is broadly diversified strategies that are giving you the best according to not just climate change, but also related to fair pay practices, gender diversity, a whole host of factors. There's 30 different sub-factors that are used by MSCI, many that are also used by S&P as well. It's really important. I wish we could go back to the days of arguing what is inside the portfolio and whether ESG is really the Dark Lord.
Yeah. You know, you have noted the ESG business is very multifaceted. It's got a lot of different aspects to the whole thing, a lot of different approaches. Some of the largest ESG funds out there have very meaningful stakes in the energy industry. You know, BlackRock's the ones who's been close to boycotting. Their ESG funds, 2 of them, have essentially above average weightings for energy stocks compared to the S&P, or about equal to them. I'm looking at 2 of them right here. ESGU has 4.8%, SUSA has 3.8%. That's the weighting of the S&P for energy stocks. I'm not sure this argument is true. In other words, what I'm saying is that they're boycotting energy stocks. They're actually not, it seems to me.
That's right. The argument falls down once you dive into it, because Exxon, and Chevron and Schlumberger are part of the portfolio here. So people either rail against ESG because they think it's focusing too much on climate change, or they rail against ESG because they believe that it has too much exposure to energy. So how can you be favoring ESG and still have exposure to these large cap multinational energy companies? You can have both. These are intended to be broadly diversified products. They're not the devil. There's nothing wrong with them, but you can either invest in them or not, and that's up to you. We don't need the government weighing in on that.
You know, Mona, one thing that's amazing to me, Todd's pointed this out before, is for all this brouhaha, the ESG industry is actually pretty small compared to the overall business, even the ETF business. Todd points out there's 186 ESG ETFs. That's only 6% of the ETF universe, and it's about $100 billion. That's about 1.5% of the dollar value of the whole ETF business. This seems like an awful lot of attention for a small outlay.
Yeah, you're right, but I think the challenge is it's still unclear how we exactly define ESG. So I've heard some measures say as much as 1 out of every $3 of professionally managed assets are in some ESG fund or another. That's actually the crux of the issue. It's how pure are you being in terms of your definition? What is the perception, your expectation about what you want these funds to include? And that's why I think there's so much confusion, because we're talking about funds that have different objectives that are all valid. It just depends on the individual investor. Some want to divest completely. That's fine. Some want to engage companies to work with them to improve. That's also fine. But I think to paint all sustainable funds with the same brush and to expect the same outcomes, and then to end up, calculating the AUM based on those definitions is actually doing a disservice to the many different individual perspectives that investors may have that are valid, and the choice that we should be giving investors in a free market.
You and I and Todd, we used to debate this endlessly. Prior to this new wrinkle in ESG, we used to talk endlessly about standardizing and codifying what ESG means. Can you update us on those efforts? There's been some global efforts to sort of make it clear what's going on with ESG overall. Why can't we still seem to agree on what ESG, not agree on what ESG is? Where are we in that debate?
I think the question itself, and it's a reasonable question to ask, but it's a little bit flawed, because we're still sitting here, still to this day, talking about ESG as if it's one single thing that we can boil down to a single definition, and it is not. For some people, it's a process about incorporating different metrics they might not otherwise. For others, it's about the outcomes and the sustainable impacts that a fund may generate. Both are two ends of a spectrum, all completely valid. My point again and again is that there are many different flavors of ESG, so it's almost impossible to define it. I mean, we wouldn't be sat here saying, why don't all growth funds look the same? Why should ESG be any different?
Yeah. And go ahead. Do you want to say?
I was going to say, to just give more specifics to that, you can slice the S&P 500, and it is being sliced that way in broad ESG. So S&P is one of those products, and then there's the Global X Catholic Values ESG. Those two products are not intended to be the same thing. They don't perform the same. Understandably, they're not the exact aspect, but yet we put them under the same E, S, and G aspects. So it's really important that investors understand what they're getting, and that they're not boycotting ESG in general. They're choosing the fund that fits their objective and ignoring everything else.
Yeah.
I think the institutional investor mostly understands this. They're sophisticated, they're technical, they know that they need to look under the hood and know what the specific investment objective of fund is. I just think we're at this critical mass of adoption where now everybody's talking about it, and not everybody necessarily is as initiated, or at least used to having to look at the very specific objectives of a fund in terms of the prospectus. It's an emotional topic for some people, and that's totally understandable. So I definitely think we need, as an industry, more transparency and clarity about what different products and funds are supposed to be doing, so that we can all make sure we're talking about the same thing.
But it's disturbing that all of a sudden it's become politicized. We used to have intellectual debates about where to go with ESG, but nobody ever stood up and said, this is all a bunch of nonsense, the whole thing. We shouldn't be doing this at all to begin with, and we don't want it, nobody wants it. And actually, the evidence is that people are very interested in sustainability, and the industry goes where the interest is. Just like there were pot stocks that came out 7 or 8 years ago. The industry has seen people are interested in sustainability, and that's really what this is all about, and why I find it so puzzling that all of a sudden this has become an issue. I certainly think it's certainly fair to go to energy companies and say, let's try to do this, or are you doing something to improve your carbon footprint, for example? This is why Occidental shows up on ESG scans, because it ranks very high on certain ESG metrics. And so Occidental has a very strong overweight in a lot of ESG funds that show up, and maybe Marathon does too. That's fair to ask that kind of question, but to say the whole thing is a bunch of hogwash, I just don't, it seems kind of strange to me.
I completely agree. And honestly, the perception right now is that the entire ESG industry is in a major state of flux. But the reality is that the dollars in these products are holding strong. And there is still very much a market for this. So it is worth talking about.
What about some other sub-aspects of this, Mona? How about like greenwashing? So greenwashing is when a company promotes a green agenda, but it isn't really green. It's sort of not phony, but they're not what they really say they are. Is this a big problem in the ESG space? Arnie or anybody else want to jump in? Go ahead.
From my perspective, and obviously I'm biased, but so I would love to hear the views of my colleagues here. But with regards to the ETF industry, I wouldn't say it's a big problem. All of the ESG ETFs that I'm aware of, they very clearly label not only the fact that they take into account ESG factors, but they very clearly outline the underlying methodology, and therefore make very transparent, very clear in how far the ESG scores are being used, how they're not being used, and the fund manager of the ETFs, as a fund manager, we don't have the discretion to deviate from that. So we will always fully stick to the rules as they are published in our prospectuses. So I wouldn't say that in the ETF industry that's a big problem.
But if sustainability is a hot issue, you're going to have people making outsized claims. In a way, that's what greenwashing is to a certain extent.
I mean, here's the challenge. As a concept, it's very easy for us to all agree on the definition. Greenwashing is when you overstate the sustainable impacts of a fund. But in real practical terms, what does that mean, and how do you know when you see it? Okay, is it when any time an oil major is included in a low carbon fund? Okay, maybe. Is it when that oil major, what if that oil major happens to be diversifying and is moving more renewable year on year? What if it has more green to brown or gray revenues, whatever the industry is calling it these days? I mean, the fact is it's not even, okay, we're having issues defining ESG. Defining greenwashing is even harder in many ways. Yeah. We can't all agree on what it means, and totally agree with you, Arnie. As long as the products do what they claim to do in terms of the prospectuses, that's one thing. It's another thing whether the market's expectations and perceptions about what ESG, or at least what they think it should be, versus what a product does. That's that area where I think we're seeing a lot of the push and pull these days. And it's a bit of a tricky situation.
But it's happening is more relevant in the active space, because active managers have long used governance, for example, as something that they've filtered through the individual companies that they're focusing on. And so they decided to put ESG within their label or make it more visible within their perspective. An index-based ETF tracking an S&P, an MSCI, a FTSE Russell index is just doing that. It's tracking the index that's filtering specifically on ESG characteristics, as opposed to ESG plus valuation or ESG plus quality attributes. So that's among the differences between the active and the passive space within the ETF and the mutual fund world.
Yeah.
Not just that, though. Also, sometimes you'll look at a fund and you'll say, okay, this is supposed to be ESG. It might contain a name you wouldn't expect. But actually, if the rules-based selection process of even a passive fund is such that it's penalizing companies or rewarding them depending on their ESG credentials, that actually may do more to move the needle than if you just excluded them altogether. So it's really tricky to say just on the face of it whether a fund is ESG or not based on that point.
Now, Arnie or anybody, Gary Gensler from the SEC has said he wants more specific rules around naming of funds. This is an issue. He's brought it up several times. He wants them to explain, for example, if you're a carbon neutral fund, explain to us why you're carbon neutral and explain the standards that you're using. Is that a reasonable demand, and how is the industry responding?
Yeah, to that? I would say, sort of as a representative for the industry, that's a very reasonable demand. It is very much in our interest that our clients, our investors, very clearly understand what they invest in. That interest is fully aligned with ours, and therefore having naming conventions, having standards that everybody has to adhere to, from my perspective, makes total sense. We've seen a similar dynamic in Europe with SFDR, and that dynamic coming here to the US from my perspective is very welcome. That levels the playing field. It addresses some of the concerns that Mona was talking about in relation to undue expectations in relation to what is ESG and what is ESG not. To level that playing field makes total sense.
It makes sense that what he's saying, but do we want Gensler to go out and start saying, oh no, this is not really a carbon neutral fund? Or how do you, obviously you got to say what you are, right? Truth in advertising, right? And you can't exaggerate, and you can't do greenwashing, and you can't have a phony metric if you say you're carbon neutral. Everybody agrees on that, right?
Yes.
But how do you implement that aggressively against somebody who's not adhering to those simple principle-based standards?
I think it's a good thing to at least ask the question and have asset managers have to answer what is their criteria and be more as transparent as possible about what it is that was behind the scenes that led to a company or companies in general being included in it. But that shouldn't be where we stop, because there's ESG ETFs that perform quite broad ESG ETFs that perform quite differently from one another, and they do so because of what makes it into the portfolio. Is Tesla part of the ESG index or not? And that's something that we've debated in the past. Tesla being such a large company, it's going to drive the performance if it's in or outside of the portfolio.
Yeah, and of course, this was a real point of contention. I mean, this was the point where Elon Musk sort of split from the whole thing, where he came out and said, what are you guys throwing me out of the ESG fund? I'm like the most ESG guy out there. As a matter of fact, on other criteria like social and governance, Tesla had very significant problems based on the criteria that S&P was using. You can understand if you read what they said, you can understand what was going on there. So I'm sympathetic to Elon because I think very highly of the guy, but based on the way I looked at the way they had that ESG fund set up, I understood exactly what they were talking about. It wasn't a mystery to me. I want to move on. This whole ESG debate, Todd, from Texas and Florida, it harks back to Milton Friedman's old arguments that 40 or 50 years ago, that the role of a company is to serve solely its shareholders, and its purpose is purely to make profits for its shareholders, and there should be no other considerations. Is it fair to say ESG is coming out of a different mindset, that the stakeholder concept, that there may be other interested parties? I'm trying to broaden this out philosophically. What is ESG? Where does it come out of?
Well, so many of the factors that are part of ESG have an intermediate or long-term impact. So how diverse is your workforce? You're likely to be more profitable if you are diverse. That's what the research says. Are you being sued and do you have labor practices? That's probably going to hurt you from a lawsuit. That's something that happened with Tesla. That's why it was removed from the S&P 500 ESG index that's behind S&P and a couple other products. So it's part of it. People are looking at more than just how profitable a company is in the upcoming quarter. And that's a good thing. A long-term shareholder-friendly approach is something what ESG is doing. But I also find it crazy that we're saying that we're only investing in companies based on how profitable they are. We've got valuation-driven products. There's an S&P 500 value ETF. We've got strategies, the triple Qs excludes financial companies because that's the criteria that they have. There's no boycotting of the NASDAQ 100. ESG is just getting the spotlight, often for the wrong reasons.
Yeah. You want to add anything to that?
Yeah, I mean, the challenge here is that when we're talking about ESG, again, it's so complex. This is a very complex issue. I understand the criticisms that some people may have. If they want an environmental fund, those exist. If they want a social fund, those exist. The challenge comes down to when you're trying to balance different objectives, there are very real interconnected trade-offs in the global economy. It might be the case that if you pursue low carbon emissions, you might end up creating sort of job losses, or you may end up creating some other economic fallout. So the purpose and role of ESG is to try and counterbalance many of these different questions that are very legitimate and valid, and how one index provider or one data provider does it is just a starting point for a conversation. No one is claiming that their approach is the be-all and end-all solution to these very complex social questions. It's really up to the end investor to take that as a starting point and to layer in whatever additional considerations they find important to themselves.
Speaking of ESG, we had, I watched very carefully the Strive ETF that came out. And of course, Strive launched an energy ETF to push back on what it claimed was stakeholder capitalism by asset managers like BlackRock. And it's interesting, we've been paying attention to it. And it's basically the S&P Energy Index. It tracks closely, but has a higher cost than the S&P Energy Index. And they have obviously a different sort of approach. They want to influence the proxy votes, which is completely in their right, and everyone should have a right to do whatever they want on that front. But from your point of view, watching the ETF industry, what do you think of companies on the other side of that who are trying to argue that we want to influence proxy voting in another direction?
Right. Well, I think we have choice. Investors have choice if they care that their energy company is going too far in their mind towards clean energy, and they want to be able to be part of a strategy. Strive now offers that. But you're right. It's a more expensive version of the energy sector. It's decided they've made BlackRock into the villain in this case, and that's a hard argument. You've got to convince people to buy your ETF because you don't like the fact that the parent company of your index-based ETF is voting a certain way. I don't think people fully appreciate how BlackRock is voting and are concerned about it. So they're buying XLE or they're buying IYE because they want broad exposure to the energy sector. I don't think they're going to put a political slant on this. That's what Strive is trying to do. Yeah. They're referring to this as capitalism in a different way. It's an ETF investment. It should perform the way you want it to ultimately perform.
Yeah. My take is very simple. Some are saying investing should only consider how much profit each company is making, and that's it. But ESG itself implies profits have to be made on a sustainable basis to work, even from a fiduciary standpoint. So there's nothing in ESG that says you shouldn't make profits or that ESG is necessarily punitive. It just asks companies to have considerations beyond short-term profits. We can all agree on that, right?
I love that.
Why the industry is suddenly on the defensive about this, what seems to be a very clear statement of fact, just like, you know, a technology company wants to invest in companies that are improving their profits on technology, for example, but may have other issues. You know, they may want some other aspect of investing important to them. That's why this is here, to give people choices. And the idea of boycotting energy, it seems kind of amazing to me. In fact, obviously, we hope that these big energy companies turn into more sustainable energy companies. I'm pro-energy. Who's not pro-energy?
Well, we
yes,
definitely need lights.
Yes. Occidental, get bigger, get more important, get more sustainable. Yes, yeah, I vote yes.
I think you're hitting a really critical point on the head, though. Time horizon matters, right? So if you're looking at a very short time frame, maybe certain things appear to be more profitable. But once you take that longer term view, things like reputational considerations and what society thinks more broadly, potentially impending carbon taxes and pricing that make it less profitable to invest in certain types of companies, these things matter. So really, time horizon is the thing that's separating all of this discussion, in my view.
Yeah. Final point?
Yep. I just want to highlight everything that both you and Mona just said. Yeah. The time horizon is critical, and sustainability of profit is important.
Yeah.
You can buy an ESG ETF. You don't have to buy an ESG ETF. The choice is up to you. But we really don't have to have politics join this.
The business is that we are already seeing other kinds of ETF products in response to ESG, like drill, for example. And those are, you know, that's the beauty here. If you have an idea and you think there is a market for it, there's an ETF for that. We used to joke about that years ago. There's an ETF for that. And there really is. And that's one of the things that I love about this business because, well, they don't always work out, folks. Many of them don't, frankly. And some of them long-term are not great investing ideas. But the public does have a choice. That's what the ETF business is all about. Now, that does it for this week's ETF Edge. My thanks to Arnie, Mona, and Todd. We've asked Todd to stick around and give us his 3,000-foot perspective on the ETF industry for our ETF Edge podcast. That's coming up. And remember, you can see all of our shows on our website, etfedge.cnbc.com. Everybody, have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the ETF Edge newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.